So before I get started, I want to thank the leadership team here at our firm, my partner Tyler Opp, Marina Leffelman, and who's not showing here is Diane Apol, who is another seasoned CPA. Collectively, we have spent hundreds of hours literally digesting the new legislation that's been coming down the pike the last couple weeks. And I want to thank Kevin as well for putting these presentations together and coordinating with Val. It has really been a big team effort. And Tyler Jones has been a great partner in this as well, sharing notes and debating the various provisions of the Act and what the heck all this stuff means. So what you're seeing there is our disclaimer. This is general information, not official advice to any one of you. And I say that because this is a moving target. Every day there's new information put out on the various pieces of legislation. In fact, this morning we go to the SBA website or DOL website, and there's some new information that we're going to get into a little later. So what's happened since our last broadcast? We had the big CARES Act passed on Friday, as well as DOL has weighed in and provided some guidelines. There's been a ton of questions on unemployment for the various practices, so we'll hit the big points on that stuff. Also, confusion between the SBA the economic injury, disaster loans, the EIDL loans, and how that interplays with the new Paycheck Protection Program, the PPP loans, or what we'll refer to as the PPP loan or the forgivable loan. And then we're also going to touch on what the CARES Act has done for unemployment for owners and self-employed individuals. And the last one is that emergency EIDL grant, that $10,000 immediate loan grant that came out literally Sunday afternoon. And I'm sure it's circulated through the dental community, and many of you have probably already gone online and applied for that. So quick recap, the FFCRA is the Families First Corona Response Act. It's what we covered last week, and some key standby unemployment issues. The Families First, emergency sick leave. A lot of questions seem to be getting on this is, does this apply to me? My office is closed. I've got all my people out on standby unemployment. And the answer is no. Department of Labor has come out and affirmatively said the emergency sick leave and the emergency family leave provisions under the Families First Act do not apply to businesses that are closed or to employees that are out on any form of unemployment. Now, where this is going to come back and potentially impact practices is after you're back open and your employees are back on the payroll and they're off unemployment. The one in particular, well, certainly if they're sick, they're going to be out. But the one in particular that could very well impact offices in kind of hamstring operations is if you have an employee who has a child that's at home because their school is closed or their daycare facility is closed, tied to the COVID, they're going to be able to tap into this Emergency Sick Leave Act and following the Emergency Sick Leave, the Emergency Family Leave. Tyler Jones, you got any add-on there?
Do you want to talk a little bit about the under 50 application for just global exemption from the Act?
Okay, let's go there.
So just so that people are aware, when the Act, historically FMLA, which is kind of the closest analog to this statute, there's an exemption for small business owners. When the Act was passed recently, They said we could expect guidance from the Department of Labor on how healthcare providers and business owners under 50 employees may apply for an exemption from these new rules. On Sunday night, the Department of Labor, in a Q&A that they put out, gave us the rules for applying for exemption, and they're really gray. So I would expect more guidance from these, and you should reach out to your team of professionals to paper this correctly and make sure that you've memorialized it correctly. And again, this doesn't apply right now if your offices are closed and people are laid off. This is once you're back up and running. But the rules are that as to the potential exemption available for businesses under 50 employees, an authorized officer of the business, so if you're a PLLC, that's the managing member or the sole member, and if you're a PS, that's usually the sole shareholder and the president, you, the doctor, in both cases. If you determine that the provision of paid sick leave or expanded family and medical leave would result in your practice expenses and financial obligations exceeding available business revenues and cause your practice to cease operating at a normal capacity, or the absence of the employees or employee requesting paid sick leave or expanded family and medical leave would entail a substantial risk to the financial health and operations of your practice, or there are not sufficient workers available for you to have cover the employees who are out, then you can self-exempt from these statutes, and you at that point would not have to offer them to employees. It's a little bizarre. I was talking to some employment law colleagues who work in DC at some government offices, and I was surprised that this is how the Department of Labor has chosen to handle it. No doubt because they're too busy right now to handle applications for exemptions. So you should memorialize in writing and update your employee manuals if this is the route you want to go. But I would expect more guidance in the coming weeks about how you specifically exempt out of this. But for right now, there is a pathway to self-exempting from the statute.
So I would say, Tyler, to add to that, we see the main application of this once your practices are able to get back open. So obviously for all the practices here in Washington State, until May 18th, none of this is going to apply. Yes, the effective date of the bill is April 1st. However, if your practice is closed, none of this really applies. So for example, later in the year, let's say in the middle of June, after everybody's back to work, you have an employee who gets sick or is required to stay home under one of the other provisions. That's where this is ultimately going to apply and provide some additional tax benefits for you at that point. But for right now, again, to reiterate, there's really nothing to see here.
I agree with that. The only thing I'd caveat it with is it was effective April 1st.
Correct.
Yeah.
Right. So just a real quick recap, the sick leave is for the first 80 hours or first 2 weeks, and the required pay, employer pay is for the listed reasons. Once it flips over to the emergency family leave, the only payment obligation for small employers is for covered leave solely for the child at home because of school closure or daycare closure. Tyler Jones, you want to touch on the requirements for reinstatement of position after leave?
So after leave, you have to, generally the difference between a termination and a layoff historically has been that in a termination, you do not have any obligation to rehire the employee in the future. Layoffs generally come with an obligation to, if you've laid off an office manager and you find on May 19th that you need an office manager, you generally have an obligation to look to the office manager whom you laid off. As of right now, under this act, there is currently a policy that if hiring the employee would cause a major financial hardship to your business, or rehiring them, bringing them back out of being laid off, you are not required to bring them back on. Now, you can't choose who you are not going to bring on or rehire based off any kind of discriminatory purpose or intent. But if the business exigencies of your practice in a post-COVID-19 world justify only 2 hygienists as opposed to 3, or justify only 1 front desk person, you are not obligated to bring those people back. One thing you may want to consider is, and we'll talk more about this, is how the payroll protection program and keeping your payroll at a certain number for loan forgiveness is impacted. But from a strictly legal perspective, if your practice for financial reasons isn't going to support the staff it once had, you're not obligated to rehire everybody.
So in terms of if you do have to actually end up paying out any benefits to this, and again, this is going to apply to those practices that once they get back open and somebody then at that point needs to take leave under these different provisions, the wages that you pay those employees ultimately will be recouped by you, the business, in the form of a payroll tax credit to be applied against your otherwise normal payroll tax obligations. So there are some limitations to it in terms of the amount that you ultimately get back, but the way that it's designed and the mechanics of it are that you are, as an employer, essentially made 100% whole on the amounts that you end up paying out. The timing of it is a little bit wonky in that you're essentially paying wages before you ultimately collect or receive the tax credit. However, again, the mechanics of it are designed to make you as the business 100% whole at the end of the day.
Okay, just touching on Department of Labor guidance. As Tyler Jones said, these updates are coming in real time. Tyler, anything to add to what you've already commented on? I think
No,
the biggie is that,
go ahead, sorry, Brian.
no, that's fine. Go ahead.
No, I was just going to say that, you know, the self-exemption for getting out of having to offer it is important. What Tyler Opp just touched on about, you know, what your obligations are to rehire people once they're on the taking advantage of the act if you choose to utilize it. And then there's a poster that the Department of Labor has on its website that you need to print off and put in your practice when it's up and going. That's mandated, kind of like your OSHA or other things that you hang in your back room. But those are the big ones that have come out in the last 3 or 4 days.
Yeah, I've had some questions from clients as part of the misinformation floating out there where they've had laid off employees say, hey, you have to pay me these benefits under the Emergency Sick Leave Act. And that's not true, because if you look at the third bullet point, you know, ignoring the fact they're laid off and it doesn't apply in the first place, but there's no retroactive benefits prior to April 1st anyways.
Yeah, I think
So,
that there's a, yeah, sorry.
You got something, Tyler? You're going to say something?
All I was just going to say is that one of the number one questions I get, and just to be clear, is if you've laid off an employee, they don't work for you anymore. They're not your employee. It feels like it's maybe just you're decided to see other people for a little bit or something, but it's not that you're broken up. You do not, they do not work for you. You are not their employer. So most of the acts and the benefits no longer apply.
All right, let's keep moving.
Well said.
Unemployment benefits for employees. So you want to turn that down?
Sure. So I think the biggest part of this for all of our business owners listening in, that under the CARES Act and some of these other provisions, it kind of takes our normal way of thinking about unemployment and kind of flips it on its head a little bit. So for those of you that are practice owners, you're self-employed, traditionally you would not have qualified, at least under Washington State, for unemployment compensation. Under the new law,
The employee part.
Okay.
We're going to go.
We'll get into what I'm going to talk about in a little bit. But at the end of the day, your employees are going to be compensated, and under the CARES Act, they're actually going to be receiving an additional $600 per week in addition to what they normally would have qualified under the state program. So the way that the math works on this is actually quite advantageous for most of your employees. For your employees that are earning, less than $55,000, in most cases, the math on this works out where they're actually better off on unemployment than they would be actually working. For your employees that are making between about let's say $56,000 to about $70,000 or so, they're roughly made whole. And then for the employees that are in excess of that, the replacement percentage starts to go down. There's no additional benefits for the employees that are making in excess of about $105,000. So in other words, somebody who's making $150,000 compared to somebody who's making $105,000 on unemployment, their checks are going to be roughly the same.
Keep on that for a second. And don't bother trying to write down that long URL. Valerie is going to distribute the link to this presentation after this webinar, so you'll have access to all the source documentation in here with the links that are clickable. So just as a footnote.
That link at point number 4 goes to about a 30-page handbook that ESD has out there, and it covers a lot of the questions that we've been getting about unemployment, about how do I apply for it, how much am I going to get, all that stuff. So just refer your employees to that handbook. It'll answer a lot of their questions. It'll walk them through the process.
So and one more thing on that as well, at least as of last night when we were going through the Washington State Employer Security Department website for unemployment, it does not appear as though they have everything updated yet to reflect the application of this law. So, for example, the $600 additional benefit that the employees are going to be receiving, mechanically, they haven't been able to basically update their website yet. However, it is still going to be backdated to the effective date of the law. So assuming they've been on unemployment for the last couple of weeks, or it continues here for the next couple of weeks, their checks are going to be short until they get all of this administered, but they will get caught up for it.
So on that point, since the effective date of the law is last Friday, March 27th, it fell in last week, so we're thinking that employees out on unemployment are going to get that extra $600 for last week, this week, and the weeks going forward. So that takes a lot of the financial stress off the practice owner, because I'm sure you're all been getting kind of freak out inquiries from employees like, God, how am I going to pay my bills? How am I going to buy groceries? Because this unemployment check is a fraction of what I'm used to getting paid. And so all those questions about, well, can I dip into my PTO, or I can take some of my accrued sick leave, very quickly a lot of those pressures are going to go away. The SBA Economic Injury Disaster Loan. So this is an SBA program that runs side by side now with the CARES Act, the Paycheck Protection Program, or the PPP loan program. Businesses are able to apply for both of these loans. The only prohibition is that you can't apply for the same purpose or the same use under both loans. In other words, you can't apply for what we'll call an idle loan, these economic injury loans. You can't apply for an idle loan to cover the same expenses that you're applying for the PPP loan for. So there's been a lot of confusion out there, and I think a lot of stuff out on the internet and articles that we've seen published that's basically saying, hey, if you apply for an idle loan, it's going to preempt you from applying for a PPP loan. That's not the case. In fact, it's specifically stated in the CARES Act that employers can apply for both. So the point is, you have to be strategic in your loan application for an idle loan in terms of identifying what what you need the money for. What are you intending to use the money for? In other words, it'd be a range of expenses other than the covered payroll that the PPP loan is intended for. If you get an EIDL loan before you get your PPP loan, it can be refinanced into your PPP loan. So again, there's some strategic choices through this kind of maze of options. So we're not going to get into the details of an EIDL loan. That's a level of conversation you need to have with your own advisors. So as part of the CARES Act, they passed this emergency EIDL grant, the $10,000 grant. Technically, it's a subset of the Emergency Economic Injury Disaster Loan Program, and it's a very quick application process, as I'm sure many of you have seen. And we can't think of a situation where a dental office doesn't meet the criteria. It's a self-certification criteria to go in and get these EIDL grants, these immediate EIDL grants. The question has also come up, well, what about for, I've got a LLC that owns the real estate that leases to the practice. Does that LLC also qualify for an EIDL grant? And case-by-case situation, there, again, it's got to meet the self-certification regarding the need. But generally, I would say yes, but clear that, have that conversation with your advisor and make sure you're not going to violate the SBA rules. You get up to, if you look at the application online, it says you'll get up to $10,000. We have no idea how they're going to parse that out, if it's a $10,000 across the board, or, if they're going to divvy it up based on the applicants. We have no idea. Tyler Jones, you have any more information on these EIDL grants?
No, these are tax-free, correct, under Section 130? It's a grant?
The statute, well, the grant implies that it's tax-free, but interestingly, the statute does not address the taxability of the $10,000, although the CARES Act does address the taxability of the PPP loans. And those PPP loans, we'll reiterate this later again, the money you receive that's forgiven under the PPP loans is tax-free. So if we connect those dots, we're going to presume that these $10,000 grants are also tax-free. You got anything to add on that?
Nope.
The SBA website and the application, it says, within 3 days of acceptance of your application, you'll find $10,000 hit your bank account. Like I said, it's a self-certification that you're an impacted business. Well, for dental offices, the forced closures, you're definitely an impacted business. It's your side real estate entity is the question mark. I would argue that if the practice stops paying rent to yourself, to that side entity, that by default that side entity is also an impacted business, and I would look to go ahead and apply for that EIDL grant for that side LLC real estate entity. Use of funds, here's the scope of use of funds. I'll note one interesting difference between the allowed use of funds under these EIDL grants compared to the PPP loans. The very last bullet point says repaying obligations that can't be met due to revenue loss. It's a much bigger bucket of expenses than allowed under the PPP loans. And presumably, economic injury loans in general will have this same definition of use of funds. So that's why I say, you need to have these conversations with your advisors to look at projected cash flow, how you're going to make it through this crisis. Are you able to get enough money through the PPP program or not? If not, then I think you should really take a hard look at also applying for funding through the EIDL program. The last point there, number 7, There is a pathway to roll your EIDL loans into your PPP loan. And also this $10,000 grant ultimately is going to reduce the forgivable loan amount under the PPP loan program. Did I miss anything? Tyler, anything you want to add to that?
No, I just think that more so than ever, this is a practice-specific issue, and you need to reach out to your advisor to time these grants, your application for the PPP loan, to make sure it gives you the most bang for your buck possible.
Yep. So the Paycheck Protection Program loans, the PPP loans, or the forgivable loans, we're going to use those terms interchangeably. They're loans made during the period Feb 15, 2020, ending June 30. Well, this bill just got passed March 27th, so don't understand the Feb 15, 2020 date. It's available to business entities, including solo-owned PLLCs, which a lot of practice units are, or self-employed individuals. So these are just Schedule C practices that aren't formed as a PLLC. In other words, it's essentially available to all practice owners. The use of funds, primarily payroll, and Tyler here will comment about that based on information that's come out just in the last couple of days. Costs related to the continuation of health benefits, interest on mortgage obligations, rent and utilities, interest on any other pre-existing debt obligations. Now, what's interesting is another disconnect in why we say there's got to be a lot of regulatory guidance issued to clear up some of these disconnects. So if you look at this list of allowable uses, the very last bullet point, interest on any other pre-existing debt obligations. When you flip over to the forgivable loan provisions, it only lists those first 4 bullet points. It doesn't list the 5th one. So we think that maybe was a disconnect in how rushed this statute was drafted, and that through regulations on how to apply for and what money is available to be forgiven, we think that possibly this 5th bullet point will be added to that scope. Any business concerned that employs no more than 500 employees, so that's pretty much all of you listening. Tyler Jones, the only situation I could think maybe that wouldn't apply is a larger DSO group.
Yeah, that's for a dental practice. We don't have corporate dentistry here in Washington, so it's probably an Oregon problem, or some large DSO, but that's about it. Right, and there's some affiliation rules, and we're not quite clear how those affiliation rules are going to work, where you have same group of owners that own multiple practices and somehow get over that 500. We don't have any situations in our practice that we work with that would bust that 500. Maximum loan amount is 2.5 times your average payroll. Tyler Opp here is going to get into that calculation in just a minute here. But what you don't see in a lot of the conversations is regarding maximum loan amount. It's actually the sum of 2.5 times your payroll plus whatever EIDL loan you're able to refinance into your PPP loan. I'm not going to get into the details, but this could be a positive strategic choice in order to increase the amount of your PPP loan that ultimately is available for forgiveness. The issue there is, again, forecasting out your cash flow and your expenses. Your forgivable PPP loan triggers with the funding of your PPP loan. You have 8 weeks to spend the money. The money you spend on allowable uses in that 8 weeks is what ends up forgiven. Well, some questions have come up. Obviously, payroll in that 8 weeks, lease payments in that 8 weeks, mortgage interest in that 8 weeks, and utilities. Well, what about deferred lease payments, that
that Tyler Jones has been able to negotiate for many of his clients. What if you get 1 or 2 months of deferred lease payments, and then you get your triple P loan, and then you fall in that 8 weeks and say, hey, I'm going to pay the catch-up on those lease payments because it's money in that bucket that I'm going to get for free, forgiven. So there's the point is, don't ignore the add-on to the idle loan refi into your triple P loan. It's beyond the scope of this presentation, but as we've thought through it and talked about it, there's some strategy in the timing of all this. Lender authority and consideration. It appears the key is that you had to have been in business February 15, 2020, and had employees on the payroll, because the CARES Act is all about putting money in the pockets of employees. Now we've got practice transitions that have happened post-February 15th. And so the question is, well, does the predecessor entity count as having been in practice as of February 15th? We don't know. Tyler Jones, have you seen anything? Any comment on that?
I saw some guidance that says that if you don't have the numbers you need to base it off your 2019 payroll figures, that they'll amortize out what you have if you don't have a full 2.5 months to go off of. Does that answer your question?
Well, have you seen anything put out there about consideration of a predecessor entity? Because if you haven't been in business as of February, I mean, take somebody who closed on a practice February 28th.
Yeah.
They appear to be kind of out of luck for the Triple P program.
It would appear that that's the case based off the language of the statute, since 99% of practice transitions are asset sales and not stock sales. I haven't seen any guidance on that point, but it would appear that you're out of luck unless we get some different guidance.
Agreed. And, the guidance would be as well, can you consider the predecessor business entity, which would be, the practice you bought, the previous practice owner? And we don't know, but hopefully, because there's definitely some practices caught in this kind of no man's land, unfortunately. You're allowed to refinance your idle loans, as I've said many times, into your Triple P loan. Borrow requirements. It's a self-certification. I'm going to turn this over to Tyler Opp because we've got new information just last night on the process and how it's going to work.
So before we get too far into that, I think it probably makes sense to kind of take a step back. And for many of you dentists and practice owners out there, I think many of you are conditioned to normally think that the things that you hear about in the news, whether it relates to tax credits or economic stimulus or whatever it is, that they typically don't apply to you, so you kind of end up zoning out. Especially with the tax law that was passed in 2017, whether it's the qualified business income deduction or tax credits for children or education or whatnot, most of our dental practice owners are typically phased out of all of those good benefits. And so when you hear about these things, your first inclination is, well, I don't qualify for that, so none of this really matters. We're here to tell you today that for this Paycheck Protection Program, the PPP, you do qualify for it. And the benefits of it, especially for you as business owners, is potentially enormous, especially when we factor in the forgiveness features on the tail end of this after you've received your money and your business is back open. We went through our client list, and we're struggling to find a business that does not benefit enormously and directly from these programs. So the first thing that I would say that the process is, it's not fully formulated yet. The bankers that we've talked to in the last 72 hours, even the last 24 hours, they're still receiving guidance from the Treasury. That guidance is expected to be in the hands of the banks by this Friday, and the hope is for the U.S. Treasury that over 11,000 banks ultimately are going to be participating in this, and their numbers are roughly 95% of all credit unions and banks, including community banks, regional banks, all of the different banks that we all use and work with, ultimately are going to be part of this program. The application itself is not finalized, but we have received a draft from the SBA on basically what it's going to entail. It's 2 pages. In some cases, it might even be a page and a half, but it's basically a self-certification for you as the owner of the company to indicate what you think your ultimate loan amount is going to be. It's based on a couple of different things that we'll get into, but ultimately you as the business owner are going to be self-certifying the amount of the loan that you qualify for. On the back end of it, you're going to be required to provide some additional documentation in terms of what you actually get forgiven, but at least for the initial loan application or the grant application, it's going to be on you and your advisors to determine what that amount is. The qualifications that most SBA loans generally require are essentially thrown out the window. For example, the fees are going to be waived. You do not have to have the requirement that you're able to get credit elsewhere. There's going to be no personal guarantee. There's no collateral required, and there's essentially no prepayment penalties in the event that you aren't able to have your entire loan forgiven. There's going to be no prohibition against you just paying it off and not incurring any interest charges. Anything to add, Brian?
So you can go to the SBA website and view this draft form. Like Tyler said, it's 2 pages. It's almost like the EIDL grant form, really simple. I will caution you, that once this is in place with the banks, and if not this Friday, this will be in place with the banks likely next week. I caution you to rush and go fill out this form and hit the send button, because we're speculating that the funding is going to be very quick. Because again, the intention of the CARES Act is to use the banks through the practice owners to funnel money back into the pockets of employees. The issue is, and you have to do not forget this, this is the very critical issue. The amount of the forgiveness loan is based on the money you spend in the 8 weeks starting with the funding of your loan. If your practice is still closed, how are you going to spend that money without bringing your employees back? As long as your practice is closed, your employees are getting paid through unemployment. So again, this is a timing strategy you have to work out with your advisor in deciding when you push that button to go, submit your PPP loan application. SBA has also issued, in what, how many pages we have here, Tyler? We got a page and a half of instructions, and then on their website they have another about a page and a half of information on these PPP loans. What we find interesting is that the information they're putting out on their website does not agree with the statutory provisions. Regarding forgiveness, for example, the statutory provisions say in that 8-week period, if you spend money on payroll, benefits, state payroll taxes, lease, interest on mortgage, debt, and utilities, all those expenses qualify to be forgiven up to the total amount of your PPP loan in that 8-week period. Yet on the SBA website, I'll read it verbatim. The loan will be fully forgiven if the funds are used for payroll costs, interest on mortgages, rent, and utilities. And in parentheses, due to likely high subscription, at least 75% of the forgiven amount must have been used for payroll. The must have been used for payroll is not part of the statutory provisions. Tyler Jones, you got any comment on that?
No, you got it. I don't have anything extra.
So this certainly creates uncertainty. The CARES Act also, just about after every section, it defers regulatory authority to, SBA or Department of Labor. So SBA's regulatory authority, like insisting that 75% be used for payroll costs, may win the day versus what's written in the statute. So the other caution is, as you go out and listen to webinars from like the U.S. Chamber of Commerce or from your trade associations, they'll indicate, geez, you better think about going and getting your PPP loan in there, because when the money runs out, it runs out. You won't get any. And at least for our clients, we're having those conversations. And again, the issue is if you get your PPP loan money, let's say next Monday or by the middle of April, and you're not open until middle of May, potentially you've just kind of burned or wasted 4 weeks of your 8-week, spending window. And there's a part of me, although I don't know how this is going to play out, there's a part of me that thinks, based on what's been going on and what Congress is they're already talking about phase 4. Phase 4 in terms of another coronavirus relief bill coming through. And the commentary is basically, if they can't get this done by end of June, they're talking about, post-June. I got to think if the $349 billion earmarked for these PPP loans isn't enough, that they would throw more money in that bucket. So that's purely my speculation. So every practice owner has got to assess the risk of being too late to tap into that money.
I think the point is that the SBA, the Treasury, and the Department of Labor are making this up as they go. The statute, as the law was passed on Friday, we've all read that and we believe that we understand that, but the interpretation and the application of that is largely left up to the interpretation of the different secretaries, again, the Secretary of the Treasury, the Department of Labor, and the SBA. And if they come down ultimately with a different interpretation of what the law is going to mean, it's not going to do any of us any good to fight that interpretation for the most part. This is fluid stuff, it's complicated stuff, and it's changing, quite frankly, every day. So all that to say, you need to be talking with your advisors and strategically thinking about the timing of all of this stuff, because the timing that we're talking about today might very well be different on Friday when the Treasury ultimately issues their guidance and their regulations.
Can I jump in really quick, Brian? Did you talk about the 75% thing that may also want to push people towards maybe timing their loan a little bit differently? Because that's a great example of what Tyler was just saying, is that we didn't see the 75% thing, and it seems the SBA just pulled that out of whole cloth last night.
Right. Yeah, I did mention that for the forgivable loan portion, SBA is basically stating in their published information that at least 75% of that bucket of money had to have been spent on payroll.
Of the forgiven amount or the loan amount? So they're going to look at your loan amount.
For the forgiveness calculation.
Yeah, so
if you qualify for $100,000 and you only end up spending $50,000 on payroll, 50,000 divided by 0.75 is not going to get you all the way to the full 100,000.
Right. Alternatively, you can't borrow $100,000 and only spend it on rent, utilities, and other expenses and not pay payroll, because then that amount of money won't be forgiven at the end of this. So
just according to SBA, just 25% of it.
Yeah.
Okay. idle loans can be used for, let's see, where are we? No duplication. So I think this is the no duplication clause. This is where the press or what the articles you're seeing out there saying, well, if you apply for an idle loan, it's going to prevent you from applying for a triple P loan. The actual details of the no double dip is you can't go to Wells Fargo and apply for a triple P loan, and then go to B of A and apply for a triple P loan, and then turn around to Columbia Bank and apply for a triple P loan.
According to the ADA, this came out on Saturday directly from your trade organization. They reached out to the administration, and their simple answer is yes, you can apply and receive both an idle and a triple P loan. So it's not just our interpretation of that.
So again, as we mentioned earlier, some practices, especially startup practices or quasi-startup practices who haven't got a lot of traction, they may need both loans because they don't have any other funding sources to get them through this crisis and get their businesses back ramped up and going. The payback of the triple P loans is through the forgiveness element. Any remaining balance that's not forgiven, according to the statute, is a maximum maturity of 10 years with an interest rate not exceeding 4%. Although on the SBA side, it says the SBA side basically says these triple P loans are 2-year loans at 0.5%. So again, that's SBA regulatory guidance. We're not sure what happens after the end of that 2 years, if there's any unforgiven balance. If at that point it turns into a 10-year loan at a rate not exceeding 4%, we don't know. So like we've all said, this is a moving target. Regulatory guidance continues to come out every day, every week. There's a loan deferment feature built into these triple P loans. When you get your money, there's no payment requirement for at least 6 months. We're not sure where the guidance of this is going to come from, if it's going to be lender specific, like if you go to Columbia versus Bank of America versus Wells, if they have latitude in determining whether or not they're going to give you more than a 6-month deferment. Loan forgiveness. Borrowers are eligible for loan forgiveness. The key there is during the covered period. Now, there's a lot of confusion over this covered period. This has come up in conversations, in webinars, in articles. And the confusion is because they use the term covered period with a different definition under a different section of the CARES Act. In the section of the CARES Act that creates these triple P loans, they define covered period running from February 15th through June 30. Under the section of the statute that addresses loan forgiveness, it defines covered period to be the 8-week period starting with the funding of your triple P loan. So where that it comes into play is, let's just say practice, the governor shuts practices down till June 1st. And you're back in business June 1st. And that's when you hit the button to get your triple P loan. It funds. You have 8 weeks from then, which obviously would straddle beyond June 30, to spend the money. So everybody gets an 8-week spending window from the funding of their loan. As SBA has issued, the 75%, the priority of the money's apparently got to be spent on payroll-related costs, and the balance can be spent on interest on mortgage obligations. What's interestingly, like I said earlier, there's no mention of interest on other obligations. And so for those practices that have practice loans, We don't know at this point to what extent the interest on those practice loans is going to come into play, because those practice loans are a combination of a loan on personal property, you know, for the equipment that you bought, and also non-personal property, the goodwill and non-compete portion. You know, so the question is as long as there's a UCC filing on the practice, does that convert that practice loan into a mortgage on personal property? We don't know. Rent payments on lease agreements. Like I mentioned, well, is there possibly a strategy here to catch up on the deferred rent because it's part of that bucket of money that you're going to get forgiven? We don't know. Amount of loan forgiveness is limited to the principal amount of your PPP loan, not the interest. You're not going to be forgiven the 0.5% interest, which in the grand scheme of things is not a big deal.
Before we move on, so just to clarify, it is our interpretation that the loan needs to be in place by June 30th.
Correct.
So where we potentially have a big issue is if the governor extends out this mandate that your practices stay closed for an extended period of time beyond the current May 18th date.
Like Oregon.
Like Oregon, for example, that are potentially shut down to September 20th or September 18th. That's where the date and the timing of all of this is going to get a little bit more precarious. But either way, we still think that your loan needs to be in place and funded by June 30th. It's possible that the administration is going to extend this, or perhaps even with COVID Part 4, in terms of additional tax relief that's coming down the pipeline, it might extend it. But as of right now, your loan needs to be in place by June 30th.
So let's talk about strategy, timing strategy. If I were in your shoes as a practice owner and understanding, you know, intricately how these PPP loans work, I would hold out until you know your practice is going to be open, because your employees are being taken care of under the generous unemployment benefits. And we're going to get into, after this section, how the owners are going to be a little bit taken care of under the unemployment benefits. But if I was a practice owner, I would hold out until I know the practice is going to be open, say May 18th. Push the button, get my PPP loan. It's probably going to be within days. And then I have 8 weeks to spend that money. The money I spend on the allowed purposes during that 8 weeks is all going to be forgiven. And as noted in the last bullet point, it is tax-free money, tax-free. Also noted, nowhere in the statute does it say this tax-free money offsets the expenses you have paid. So not only is the money you get, the reimbursement you get, or I should say the loan money you get is tax-free, you also get to deduct the expenses you spent that money on. Nowhere in the statute does it address that. Will it come back and have a technical corrections or a regulatory determination from whether it's the Treasury, Department of Labor, or SBA? Possibly, but that's how it's written currently. So the purpose of point 13 here is to just point out that the amount of the forgiveness is potentially reduced if you reduce the number of full-time equivalents or their pay rates during that 8-week period, or as the statute specifically says, if you don't restore to your full-time equivalents or pay rates by June 30, then potentially the amount of your forgiveness is, forgivable loan is going to be reduced. That's the only point here. Now, again, so if you push the button next week, get your PPP loan, in order to have it forgivable, you have to bring your people back even though you're closed. You have to bring them back off unemployment, pay them to essentially sit at home. So all you're doing is taking money, not using it very well, participating on payroll, so you've replaced those employees' unemployment checks with a payroll check from you, and the government's gonna make you whole. I don't see that as a winning strategy. As I said earlier, based on what's being put out in the press and from SBA, they're scaring people into thinking that $349 billion bucket is gonna run out. And so if you don't get in on it, you're gonna lose out on it. I don't know the answer to that. Everybody's gotta make that decision for themselves.
I think it's helpful to keep in mind what the purpose of this PPP loan is in the first place, because this is categorically different than any sort of economic stimulus that has really ever been passed, at least in my lifetime or your lifetime. It's the purpose of it is relatively unique in that the government is basically saying, we want you to get your people back as soon as possible once you're able to get open and keep them employed. And if you can do that, we will essentially cover your payroll costs. So when you view the different provisions of this in that context, some of this stuff starts to make a little bit more sense. But that's why these provisions of reducing headcount, reducing wages and whatnot ultimately come back to bite you if you don't play the game correctly. So again, the point is that you keep your staff, you keep them employed, you keep them on the payroll once you're able to get open. Again, that's the key part. Once you're able to get open, you keep everybody, you bring them back, and you're off to the races. And you'll ultimately be penalized if you don't comply with that portion of it. But again, the purpose is keep your people, keep them employed, and the government's going to pick up the payroll cost for 8 weeks after you get your loan.
Yeah, essentially the government is saying, we're a bureaucracy and we can't issue checks fast enough. So they're using the banks and then through the practice owners to get this money out and in employees' pockets. It's like the government is, the manufacturer of drugs, and the banks are the, regional distributors, and all the practice owners are the drug dealers out on the street. I don't know why I just said that.
Or the pharmacies.
Okay. This again is, there's an exemption from those lower FTE headcount and lower pay rate exemption if you bring your people back by June 30.
The point with that is that if you've already laid off your people, you're going to have the opportunity to bring them back by June 30th. So in other words, the fact that most of our practices are closed, their employees are on unemployment, assuming you bring them back by June 30th, you're not going to be ultimately penalized under the recap calculation for doing so. In other words, it's motivating and incentivizing you to bring your people back by June 30th.
Right.
Tyler, anything to add to that?
Kind of off topic, but I'll just raise it, is, the point you guys are making about being a little bit more strategic about when you apply is a really important one. And I'll give you 2 examples of things you may want to think about. This act came out probably about 2 weeks later than most doctors would have liked to have seen it for their dental practices. And so a lot of you have, one, negotiated abatement or delay of rent, right? So you don't even have a rent bill to pay with this money during this time. The second thing Brian talked about, or the reason I bring that up, I should say rather, is you need to time this money so that you're going to get the max use out of it. So I'm a big fan of really thinking thoughtfully about when you apply. The other thing I'm getting a ton of questions about is if you own your own real estate and you have a separate LLC that owns that real estate, it's not clear in the regulations whether you could apply twice as 2 separate businesses. My knee-jerk reaction is that they probably have a problem with that. I don't know if Brian feels differently. But if you have a real estate holding company and your practice and you've been derelict in having a lease in place between your 2 entities, now's the time to do that so that you can have a fair market rental value that you can pay yourself from your practice that you'll be eligible to have forgiven when and if you decide to use the PPP loan. Does that make sense to you, Brian? Because a lot of
Yes.
people just slide, you know, oh, my mortgage for my practice real estate is $3,000. I'll just slide $3,000 over to my LLC. You may want to really think about what the fair market rental value of your real estate is to maximize how much PPP you can get. And you're going to want to paper that with a formal lease between the two entities to cover yourselves. And so I've been doing a lot of that the last 2 or 3 days, is updating people's leases so that they can get, if you happen to own your real estate and your practice.
So just to piggyback on your comment about those side real estate LLC entities,
Yeah.
based on what SBA has put out there, is 75% of the PPP loan is got to be used for payroll costs. Well, if 0% is used for payroll costs, is there really going to be anything available to be forgiven in that real estate entity?
Yeah, but
Don't
if the
know.
real estate, I misspoke. I meant, could the real estate entity go get an EIDL grant or something like that?
I think, well,
And I don't
on
know
a
the
liberal
answer to it.
interpretation,
Yeah.
on a liberal interpretation, case by case, we're saying yes, but it's kind of circular. So if you have a real estate LLC that's renting to your practice and you actually have a lease, and then you, just like Tyler, you've been negotiating with third-party landlords, well, you negotiate with yourself and actually draft that lease addendum to defer rent for 90 days or whatever. Well, then technically that LLC real estate entity has been impacted. You know, they've lost
I
3
agree.
months of rent, and then they have mortgage payments. So in theory, they, on that basis, seems to me they would qualify for the $10,000 grant.
I agree with that. That's one way you could handle it. I'm just trying to think about ways to just do one application. So you say, well, I won't forgive the rent to myself, and then we'll just bake it into my PPP at the practice level.
The issue with that is, will you have enough of a PPP loan balance to absorb all that? And will the 3 months deferred rent or 2 months deferred rent, if you pay it in that 8-week window, will you be able to count it as part of the money you spent on your PPP loan? These are all unknowns. You know, so for example, if you have a $5,000 lease payment to yourself or to a third party and you defer it for a couple months, and then, well, let's just say 3 months, and then practices open up again middle of May, and you go back to your landlord and you say, well, I'm able to catch up on those 3 months versus amortized over the balance of your lease. Can I pay it? And it's paid within that 8-week window. Is that then going to add to the money you're available to get forgiven? And so now SBA has issued, well, there's kind of new math. 75% of the forgivable amount has to be paid on payroll. So that other 25%, are you going to fill that other 25% without doing any special stuff, basically, with the other qualified expenses?
Yeah. No, that's fair.
So back to this point is, like Tyler here said, just because you have your people laid off now, as long as you rehire them by June 30, you get a free get out of jail card.
And the interpretation of that is we've gone around in circles for the last 72 hours on how exactly the calculation of that works and what exactly the interpretation of it is. This is our current interpretation of what we believe the law says. Again, though, the Treasury and or the Department of Labor and or the SBA could issue guidance that is to the contrary to that. But as of right now, we believe that you should be able to bring everybody back by June 30 without penalty.
Okay. Application for forgiveness, that's yet to be determined. You're going to have, it's clear from what's already out on SBA, you're going to have to provide verification that you've actually, brought the same number of people back at the same pay rates, spent the money on payroll, all managed and run through the banks. The banks are going to be the gatekeepers for the SBA on these PPP loans.
Which, for the most part, we think that the application for the forgiveness is going to be fairly easy as well. They're going to be asking for documentation of things like payroll tax reports, 941s, all of those kinds of things. So there's going to be a big incentive to, one, make sure that all of that stuff is correct, but two, make sure that you're partnering with your payroll tax providers or your payroll providers in order to get that information. But we anticipate, for the most part, that it's just going to be kind of standard documentation, and that as long as you can prove that your people were paid, as long as you can prove that you didn't essentially reduce their salary intentionally, among a few other things, and provide copies of canceled checks for rent and utilities and stuff like that, you're going to qualify for the forgiveness. Again, during that 8-week period post-funding of your loan.
Well, like you said earlier, all the key players like Treasury, Department of Labor, SBA, kind of making this up as they go. The CARES Act, unemployment assistance, and this is for owners, self-employed owners, whether you're a solo PLLC that reports under Schedule C or a W-2 employee of a S Corp. I'll let you cover that.
Yeah, so apologies, I got into this a little bit earlier here at the beginning. But again, most of us are conditioned to think as business owners that we don't qualify for unemployment compensation. And up until last Friday, that was absolutely true. Under the CARES Act, there are provisions that include you as business owners, whether you're set up as an S corporation, a sole proprietorship, a PLLC, it doesn't matter. That doesn't go into this at all. You are going to be eligible to qualify for unemployment compensation effective as of last Friday. However, as I mentioned earlier, the Washington State Employment Security Department website is still not up to date yet. They gave us a date of about April 15th before they expect to have their current infrastructure updated to be able to handle this. And so they're basically asking you as business owners, as owners and shareholders, to basically hold off until they get it up and running. However, it's still going to be backdated to the effective date of the law. So they're essentially going to give you a catch-up payment ultimately once they get it up and operational.
Let me add on to that. Actually, there's two components of the unemployment for the CARES Act. And I've had a number of practice owners a little frantic last week. There's apparently this spread out through the dental community because unemployment is based on a week-by-week basis, Sunday through Saturday. So I had a few practice owners reach out, say, hey, should I hear we, as practice owners, qualify for unemployment. Should I file, by the end of Saturday so that I get it for last week? The CARES Act it mandated a mechanism that basically is twofold, like Tyler says. The $600 portion of it that became effective last Friday as part of the act, it'll be retroactive to last Friday. But the state unemployment base benefits actually go back to January 27th. So we're thinking practice owners who have been shut down and not working since the governor shut you down, not last week, but the Wednesday or Thursday of the week before, that if you've been not working since then, you'll get the state level unemployment, and then the $600 kicks in effective last Friday.
So covered individuals include anybody who is able and available to work but is unemployed, partially unemployed, or on standby unemployment, or unable to work because of essentially the reasons related to COVID. There's some kind of broad terms in terms of who's ultimately excluded from this, but the short answer is relatively few people. They've essentially gone away with some of the waiting requirements. They've gone away with work history requirements in a lot of cases. So for the most part, most people, if they're unemployed or seeking employment, but are unable to do so because of what's going on, are basically going to qualify.
Yeah, I call this the fog a mirror standard. If you can fog a mirror, you're probably going to qualify for unemployment benefits. Tyler Jones, you got anything to add to that?
No, I'm quiet on this one. That was perfect.
Okay. There is the exclusion here.
So there are, in a few cases where individuals will not be eligible. In other words, for those of your employees who are able to telework from home, which I think at least in most of our dental practice cases is going to be relatively few and far between. But if you do have the ability to telework from home and you can get paid, obviously you're not going to qualify for this because you're still fully employed. Or for individuals who are receiving paid sick leave or other paid leave benefits. Because again, at that point, you're not unemployed, you still have that employer-employee relationship.
And these benefits are available for partially unemployed. So your employees that are on standby, you know, for those office managers that are coming in a few hours a week to deal with phone inquiries, to rebook the schedule for your anticipated being back open, for the employees that have to come in on the occasional emergency case, they're still going to qualify for this $600 federal supplement despite working some. So as long as they're on standby and just partially working, they're good.
The calculation, however, for the repayment or the reduction in certain benefits for the people that you have working, again, the office manager is a good example of somebody who's maybe in 1 or 2 days a week to reset up the calendar and appointments going forward. You may want to rethink and be strategic again on those certain applications. The way that the calculation works and ultimately reduces their benefit is pretty significant. So it's been our general counsel to our employers, our practice owners, that if you're going to bring your people in to work, you kind of want to make it worthwhile. In other words, you don't want to bring them in for 2.5 or 3 days 1 week and 2.5 or 3 days the next week. It probably makes sense to have them on for the full 4 or 5 days 1 week and then completely off the following week, because otherwise their unemployment benefits get reduced substantially, where they could, depending on how it works, they could actually be worse off for actually having gone to work. And that would be a bad scenario where you're going to have some upset employees.
So just to kind of add a little to that, let's say you have your office manager that you say they're coming in 2 hours a day, 4 days a week. Well, have them come in a little more, but still under full employment. So if they, just for easy math, let's say they typically work 40 hours a week, you have them come in and work 30 hours, they're still partially unemployed, so they may lose all their state level benefits, but they'll still get that $600 federal supplement. And then the following week they'll get, they don't work at all, they get full state level and the full $600. And that goes for practice owners as well, for you practice owners out there. Again, it's a self-reporting system, the honor system. As a practical matter, I'm not sure how you're all going to be dealing with that. Owners and self-employed individuals now qualify, okay.
Yes, as we mentioned earlier, you're going to have to rethink your normal ideas about unemployment compensation. You qualify as an owner starting last Friday. Available up to 39 weeks. There's, at least the last time we went through this a decade ago, those unemployment benefits were extended in some cases multiple times. It's not unrealistic or out of the realm of possibility that that happens again, but as of right now, it's 39 weeks. The amount of your unemployment benefits, this is going to be state by state, so if we've got people listening in outside of Washington, it's going to be different for you. But for Washingtonians, you're going to take the normal benefit that would be calculated under our state law, and you're going to get an extra $600 on top of that. So again, the way that this calculation works is wonky, and for people making less than $50,000, they are categorically better off to be unemployed and taking benefits than they are actually working. That's obviously not the intent, but it's just the way the calculation works for some folks. It becomes a little bit less advantageous the higher up the pay scale that you go, but at the end of the day, it's still going to be your normal state unemployment benefit as calculated plus $600.
And for all the dental offices closed out there, I would imagine, we're seeing it ourselves. People are going to be going stir crazy by the time May 18th rolls around. They're going to be anxious to get back to work versus, I suspect, versus looking at, well, I'm getting paid more to stay home than go back to work and, call in with the sunny day flu to stay out another week. But I just think people will probably be going nuts by that time and want to get back to work. So just a quick recap, some big points. The really big point, I think, out of today's presentation is don't just rush to get your PPP loan once the easy application hits the banks. Be strategic on the timing. And again, we're thinking the best plan would be is to time your PPP loan to hit when you're back open. But talk to your advisors about that. Assess the fear that's being put out there on the internet and SBA. They're encouraging y'all to go rush and get your PPP money because it's going to run out. Just give that serious thought and be strategic about it. Again, I want to thank the leadership team here at Benton, Bray Dental Accounting Pros, Tyler Opp, Marina Luffelman, Diane Opp, our three leaders here on the Benton Bray side of the shop, and Kevin on the dental accounting professional side of the shop, and Tyler Jones. We've put a lot of hours into this. We know at least our clients are dependent on us guiding them through this very complicated, legislation that's been coming down the pike and thinking about it strategically. So we're here to help. For the clients of Benton, Bray Dental Accounting Pros, we apologize for the delay in getting back to you on your emails and your phone calls. As you can imagine, we've been swatting fireballs and swimming with alligators. So thanks for your patience. Thanks, Val. Appreciate you putting this on. We're not sure when there's going to be enough substantive information back out there to do another update, so we'll play that by ear.
Yeah, and stay tuned. I'll be posting the presentation link on my LinkedIn and also give it to Valerie to distribute to her email list. So you'll be able to go through all this content that we sourced from the main documents, and you'll be able to click those links in there.
So,
Yeah.
so
Thank you, guys.
So real quick, Val, we're looking at the clock, and we have a little time. Do we want to take a shot at some significant Q&A?
There's over 100 in here.
There's 100
Right.
questions already in there?
So you have 808 still with us. So what I'm going to ask you all to do, if you have a question that has not been yet answered by the group, we're going to ask you to raise your hand. Raise your hand, and then we were going to take first come, first serve. They're loading up pretty quickly here. And what I will do is I will unmute you on my end to ask the question, okay? So please don't send me a bunch of chat. Just be patient as we go through this. We have 800 people still on here. And while you guys are loading up your hand raising, just a couple of housekeeping things again. We don't have another meeting scheduled as of yet. The Brays will let me know as that comes up. Okay?
And Val, we'll pick a couple questions out, but there's just, everyone's situation is so unique. Again, we recommend you reach out to your advisory team, and if you don't have a qualified dental attorney or dental CPA, feel free to reach out to us after this.
Perfect.
So yeah, go for it, Val. We'll
Do you
we'll
want
see how
to-
the questions go.
Okay. Kevin, do you want me to unmute these individuals? I know there are several of them that are saying they don't have a mic, so they would like to use the chat feature. So you tell me what you feel is best for your team right now.
Only the ones who have mics, because there's over 100 questions in the chat function. So I'd say just pick a couple and we'll run with it and go from there.
Okay, okay. So again, everyone, just housekeeping again, while we have this moment, your CE will be submitted on behalf of the AGD. The UW is going to be sending you a link after this meeting that has a survey and a verification certificate. So please keep that in mind. Upcoming CE, Dr. will make an announcement here after the closure of this meeting. Make sure you're following us on social media, on our Facebook account. That's usually where things post first. So thank you all for your questions here. Stay tuned. I'm going to mute myself and take some of that are raising their hands. So hold on.
We're not hearing any questions, Val.
David Bass, I've unmuted you. Go ahead and ask your question. David? Going once, going twice? Okay, on to the next one. Roger Blake, you're unmuted. Go ahead and ask your question, please. Roger? Going once, going twice? Okay.
I wonder if they're muted themselves on their Zoom.
Yeah, they can be. Dr. Hoffman doesn't have a mic. So if you don't have mics, everyone, I can't unmute you. I'm sorry. So I'm going to lower everyone's hands again. Come on in through your chat box, please, and I will read the question to the speakers. Brian, can you see the chat box on your end?
Yes. You want us to go to the very last question that was submitted?
Yeah, I would say go ahead and go from there and go up and take what you can.
So one of them I see, can associates paid as 1099s apply for unemployment? We believe the answer to that is yes.
Yeah, this is recorded, so it will be sent out. There was a question regarding that, along with the presentation link.
So 88 webinar on Friday said the loan window to use is 8 weeks, was 5/1 to 6/30. That is not our reading of the statute. It's the 8-week period, starting with the funding of your loan. And this goes back to, we addressed this, as I indicated, under the 2 different sections of the CARE Act. They define covered period completely differently. And that's where it's causing this confusion about the 8-week window. What the presenter there on the 88 deal is saying, The window running 5/1 to 6/30 is because the initial quick read of the draft, it indicated you had 8 weeks to spend the money and had to have it spent by June 30. That's not the case. Keep in mind that presentation on Friday was, I believe, based off a draft of the bill. It's before the final bill was actually pushed through and signed into law.
It did change slightly after right before the president signed it, because we printed it on, I think, Thursday afternoon, and it was about 900 pages, and by Saturday morning, it was about 848 pages. So it did slightly change, but just logically, from a administrative function, it doesn't really make sense that it would be May 1 to June 30, because there's really no control over how quickly these loans are going to be administered, who's going to qualify, and those types of things. I think logically that just doesn't make sense.
Yeah,
Right.
for whatever it's worth, or sorry.
Go ahead, Tyler.
I was just going to say, for whatever it's worth, while we were talking, Treasury just dropped some guidance, and I'm flipping through it, and they're abundantly clear. It's 8 weeks from when your loan hits. There's no June 30th date.
So this goes back to our point that I think all of us have said. This is complicated stuff. The regulations are coming out every day, and it really you've got to work with your advisors on figuring out how best to take advantage of these benefits and be strategic. You know, or spend a lot of hours reading through this if you're going to try to do it on your own, figure out all the angles.
Right, 800 plus pages of it. And again, I recommend rewatching the recording after this, because a lot of these questions were likely answered during the presentation. And if it's a specific question regarding strategy, again, reiterating, reach out to your advisors.
So here's an interesting one. Where'd it go? My landlord has given me the option to forgive rent for the next 3 months, but they know how the CARES Act is helping with rent, so now they want me to pay rent. Okay, well, Tyler Jones, maybe that goes back to memorializing these deals so that they stand firm.
Yeah, I've been cranking out little lease amendments, little one-pagers, so that you can, because I saw the tea leaves where this was going, and landlords changing their mind as forgiveness comes out. So if you are in negotiations with your landlord and you want to chase the free rent, they've offered it to you, please, please, please paper it. Otherwise, you're going to find yourself in this situation.
So here's a good question. Would it be better to take the 2 weeks of sick leave instead of emergency unemployment for myself as a practice owner? Since it's a little over $500 per day, I don't plan on excluding myself from the emergency unemployment since it is a benefit to my employees. Again, I believe DOL has said as long as the practice is closed, you don't qualify for those benefits. Is that correct, Tyler?
I'd have to think through that one. If the practice had otherwise been open and the owner doc isn't going in anymore, are they still doing hygiene? Are they still closed?
Well, either case, let's assume the office is shut and they are covering emergencies, so they have a few hours a week, let's say. My reading of the DOL guidance is employees on closed office or less than full-time hours.
You may not, I would have to look into it. You may not have to. I'm just wondering of a situation where if you chose to still keep it open and pay yourself, if you really, what rule in the statute you'd be breaking.
That's an HR question or
yeah, I'm not sure. I'd have to.
Legal interpretation, right? I don't know the answer to that.
Maybe we take one more and call it, Val?
Yes, please. That would be great. Thank you. And again, everyone, I'm getting a lot of messages coming in. Please remember, we are going to be sending everyone that's registered for this event the copy of the presentation. It will also be up on our social media accounts So you don't have to email me separately, please. We are filtering so many emails, it will just get lost in the whole minutia. So just please follow us on social media. We are posting it there first, but everyone will be emailed a copy of the presentation.
So there's a question on here about, do the owner's earnings, are they included as FTEs, full-time equivalents, for purposes of the loan forgiveness? And this is a really good question, because you would think the answer to that would be no, but the answer is yes. Up to $100,000 of either self-employment income or an owner's wages are included in the calculation for determining your loan amount up front, and then also the amount that is forgiven on the backside. That's a good question.
That's $100,000 annualized, so it's 2.5 months of that $100,000 annualized.
Correct. So in other words, you can't play games.
$8,333 of a draw an owner could take if they haven't made an S election.
Yes. That's again, goes back to our earlier comments. This is completely outside of normal conventional thinking, because it seems too good to be true that if you're on your own payroll, that your wages would qualify for this. But the way that it is written, you do qualify.
Okay, Valerie, do you want to wrap it up and make some announcements about upcoming webinars?
Great, yes, I'm going to go ahead and have you unshare your screen, please. Thank you, gentlemen. Dr. Hess is taking over from here. So
Thanks
thank you
for having
everyone
us.
again. Yeah, we really appreciate you guys. I mean, I know how immensely busy you are, so thank you for doing that.
See y'all, bye.
Thank you. Okay, Dr. Hess. Dr. Hess, you're going to have to unmute yourself when you're ready, please. You're unmuted, Dr. Hess.
All right. Are you good there, Val?
I am. Thank you.
All right. Thank you, everybody that attended today's webinar this morning. I want to remind you this afternoon, starting at 2:30, we have Dr. Joel Berg presenting on medical management of dental caries, the science behind it, and the methods to do it. Again, there will be CE credit. Up on your screen right now is a QR code that you can use to go to the registration link. Next week, we also have Dr. Lane Ochi that's speaking for us, and Dr. Jason Kim. We don't have the registration link up yet for Dr. Kim, but we will do soon. We're going to continue to do these webinars, probably 2 or 3 a week over the next 5 or 6 weeks. If you have anybody that you would like to have us touch base with and have them do a webinar for us, please just let us know via the email address info@washingtonagd.org. I've got good news this morning. Dr. Ricardo Matrani has agreed to do a lecture for us, Dr. Keith Phillips, and the list goes on and on. So thank you very much for attending. Thank you again to all our sponsors, Seattle-King County Dental Society, University of Washington School of Dentistry, Comet USA, Pierce County Dental Society, Snohomish County Dental Society, Omni Practice Group, Benton and Bray, and the Dental Accounting Pros. And I think that covers everybody. So thank you. We'll leave this webinar going for a few more minutes so you can snag the QR codes, and we look forward to seeing you back at 2:30 this afternoon.
Dr. Hess, they cannot see your screen.
Oh,
Could you share your screen, please?
I'm sorry. You should have interrupted me there. Is that better?
Yes, yes.
Okay.
Yes, thank you.
All righty. First time doing this.
So those of you that are still on with us, if you want to chat anything to Dr. Hess and I, we can still see the chat box up. Sorry, everyone that's putting in chats in the chat box. We are not CPAs. Dr. Hess and I are not able to answer these types of questions. Again, you can reach out to Benton, Bray, or the Dental Accounting Pros. They're trying to filter these questions as they can. They're encouraging you also to reach out to your personal CPAs. But Dr. Hess and I are not the people to ask about these questions. Thank you.
I'll take a stab at the questions. They're not necessarily going to be a right answer, but so.
Okay, we're going to give it about 2 minutes. Again, people that are still chatting us, Dr. Hess and myself are not CPAs. We are not able to answer these questions. You can reach out to the Dental Accounting Pros directly, the Benton Brays. They're also encouraging you to reach out to your personal CPAs, please. And yes, again, as far as with the CE will be taken care of on behalf of the AGD. You will be getting a survey from UW that will give you a paper verification form to keep for your records. The webinar for the Delta Dental is going to be this Friday at 9 a.m. Please check our social media accounts. You are going to be getting emails. You should be getting emails already about this event and how to register. The code for this afternoon, you need to register for the 2:30 meeting with Dr. Berg. You need to register. You will get the code, please, after that. There is no CE number code being given out at this meeting. The system is auto recording when you came on and when you came off. It will allow me to know how many CE credits that you participated in. And again, we're going to give it just about another minute. Dr. Hess and I both are here for you to ask any questions about CE or upcoming events. If you have a question about that, you can chime in. Carlos, there is no code for today. No code for today. This is a free event and is going to be entered in by the AGD to your PACE transcripts. You will get an email from UW with a survey and a paper certificate. The CE that's being offered at 9 o'clock is with Omni Dental. They're going to be having a Delta Dental representative that will be talking about grant opportunities. Make sure you're checking our social media accounts, please, for this. There is a registration page on that.
And the QR code's coming up here in about 2 slides.
Great, thank you. I don't know about the HR and the WDS webinar for Friday. I don't know the timing of that. Sorry, Dr. Pla. Oh, that wasn't from Dr. Pla. That was from Dr. James. I'm sorry about that. I don't know that information.
And there's that QR code there.
Yeah. Dr. Pla, your question about colleagues watching with you on a shared screen. In order for us to verify CE, they have to register on their own, please. We have no trackable measure to know when people came in and out, so we cannot give them credit. You have to register for events, please.
So Val, that means they actually have to log into the webinar then on
They
some
actually
device?
They have to pre-register and get the login information. Yes, Dr. Hess, yeah.
Okay, so they actually have to log in, or they don't, even though they're registered, they don't get CE credit until
They
actually
can
log in.
register and all look under one computer. They can watch under one computer. That's fine. But
Okay.
we don't have a traceable measure to give people credit unless they register. Because the
Okay.
system records when they came on, when they came off. So we have to have every individual register that wants credit, please.
Okay, but how will you know if they're both, if you are watching on one screen?
Oh, good question. Thank you. Yes, they should be watching on their own device. Thank you, Dr.
Yeah.
Hess. Yes.
So they could do that with a cell phone or, yeah.
Yep.
Okay.
Just make sure you're muted so that we don't get a lot of feedback. Sometimes when electronics are close together, they will put in a sound that interferes with the two of them, even though your host will not hear this, but you'll hear it on your end. So just make sure those are muted. Only one thing should be going.
Val, I heard Dr. Kevin Queechin is going to do a webinar for us as well. So
Nice.
that's good. Dr. Tazir Suleiman has also agreed to do a webinar for us in a couple of weeks. We've got an oral surgeon from Germany, Dr. Markus Trosch, that is going to do a webinar for us as well. So we've got lots of people signing up.
And they're all very generous. They're waiving their honorariums, which is outstanding. We so appreciate everyone doing that. Dr. Son, Brian, again, Dr. Hess and I are not able to answer questions regarding the claim forms. You'll need to seek out this information from your personal CPAs, or you're welcome to send an email to Brian, the Benton Brays, or the Dental Counting Pros. They're going to do their best to answer these questions for you. Again, everyone, Dr. Hess and I are the only two left on. Our panelists from the CPAs have left the meeting. We are not able to answer questions regarding employment. We're here for you just solely for CE reasons at this point. Crystal, I'm not sure what your question is on this. Any idea if the virtual CE limit would be adjusted considering the social isolation requirement? Most of you, do you know what the answer to this is?
Well, I know what she's asking. It's, you know, we can only do get so many CE credits by doing online courses and that kind of thing. So I think that's what she's saying versus in person. And I don't think we have the answer for that from the AGD or the Department of Health at this point.
What you don't have to be a member.
Yeah, you don't need to be a member. These webinars are open to any dentist out there, staff members as well. Feel free to share the information, the QR codes. You know, we have a room for 1,000 participants for each of these webinars. So yeah, tell your friends, and please send us any thoughts. If you have somebody that you know that would love to do a webinar for us, we'd love to have them.
Sure. And I know a lot of the ADA execs that here in Seattle are on this webinar, so I greatly appreciate them. They can jump into the panelist questions as well if they can give us a SERP question. I know I asked this yesterday on our executive director call for the AGD. The AGD says right now that they are making specific special adjustments on the fly as far as CE. So these virtual CE limits, I will try to get an answer for you. I have another call scheduled for tomorrow at noon, but at this point in time, what they're telling me is they have not put a restriction on PACE, but I don't know about CERP. So Cheryl, Sally, Judy, or Dr. Ogata, if you guys are still on, if you could just put in a chat box if that's correct about PACE.
Val, I just got a text. Dr. Keith Phillips tells me the camera puts on 10 pounds or about 5 kilos. So thanks, Dr. Phillips.
Boy, thanks, Dr. Phillips. That's nice. Okay, guys, we're going to give you about 2 more minutes, then Dr. Hess and I are going to call it a day. We've got this other meeting today at 2:30, so we need to get ready for that as well. Please make sure you're following us on social media. I don't think, oh, thank you, Cheryl, appreciate it. We don't have the execs on to answer the PACE question at this time, so we'll try to follow back up with you on by this afternoon on that.
Val, could you briefly talk to people about our Master Track program, what we have coming up in 2020, 2021 there, or?
Great.
Sorry to put you on the spot.
Yeah.
You know what? Why don't I, for the 2:30 webinar, why don't I put together some slides regarding that, and we'll get that up.
Right.
Because that's a great opportunity, and yeah, great line
Absolutely.
of speakers for 2020, 2021.
Yes, absolutely.
All right, we probably, everybody that wanted the information's got the information, so I'm going to stop sharing my screen here.
Okay. For the 191 that are still on with us, thank you so much. Dr. Hess and I are going to end the meeting now. We look forward to you guys joining us this afternoon. Thank you, Dr. Hess.
Thank you. We'll see you this afternoon.